Welcome back to the CommStock channel. It is Friday, which means it is time for the weekly wrap-up. My name is Breann Hendrickson. Today I have Eric with us. Welcome.
Yeah, thanks for having me, Breann.
Remember, we are still accepting your yield results, and don't forget to send in those pictures and videos as well. You can send them in at report@commstock.com. Thanks for being on. Let's kind of talk about corn to start us off. It was up 13 cents yesterday. Did we hold on to those gains to finish out the week?
Actually, no. And that was a little disappointing because yesterday's gain of 13 cents was narrowing some spreads. You got to close not only above $5, but at 505, which also took out an initial resistance level at 504. So you had several things happen yesterday that kind of shocked a lot of people and looked really good, but you needed to hold the $5 mark to the close today, and we just could not get it done. And then maybe some technicians were getting a little more finite than that and saying, okay, $5 may not be as critical as 498. Couldn't hold that either. So we give back most of yesterday's gains to finish the day today, end up just 2.25 higher for the week in the December corn after what felt like a really good week coming into today. We finished the week 2.25 higher at 495.5. Little disappointing to finish the week. However, this is harvest time. Commercials are buying a lot of grain. They are going to hedge any anticipated purchases for the weekend on Friday because they don't have a choice otherwise. So you were getting a lot of that hedge pressure today. We did take back some of those spreads that were looking a little more bullish, but not to the extent that we lost the whole week in the spread side of it. So that was good. Export sales were okay. We didn't have any huge daily flash sales, but we had decent weekly numbers. Interest seems to be there. We seem to be value priced right now. That all those things could lend to some more support. But the one thing that caught my eye probably more than anything in the corn, yesterday we're up 13 cents and we gained 47,000 in open interest. So you're getting new buying coming into the market. You're not just liquidating shorts. You're getting new buyers coming in. And so we still have a lot of short liquidation to cover if we were to propel up out of these ranges and give them a reason to do so. So it wasn't an all bad week, but it certainly wasn't what we were thinking we might get after yesterday's trade.
So last week, we finally broke the Breann curse in soybeans.
Yeah.
Did they hold on to that, or did they go back under?
No, we actually had a really nice week in soybeans. And I think the last couple of days, if you ask traders, they'd be going, well, what's wrong with the soybeans? Because it all happened the first half of the week. So now what you've had this for the week. We finished 22 cents higher, 1302.25 in the November contract. We made a low, and I might get my date a little off here, but I think it was the 11th. We made a low at 1250.5. So even right now, being off the high by a little ways, we're still trading 52 cents above that low mark that we made just a week and a half ago. So really impressive trade in the soybeans, but they can't just keep motoring when we're in the middle of harvest. It just won't happen. Now, this week we should be 75% harvested on the soybeans when we get that crop progress report on Monday. That should alleviate that pressure immensely. At that point, what's going to be sold has likely been taken to town. What isn't is going to be stored. The bins will be locked, and it'll probably get sold next calendar year. So the pressure should ease up. But one of the things that I think really sparked us and caught a lot of attention this week, for myself included, was Monday's NOPA crush report, the National Oilseed Processors Association. They put out their crush report on Monday, and I'm going to show a snippet of that information. So when we look at this, we can see that we not only had a record September, but it was 3 million bushels above what the trade was anticipating. And we had a 105-month low on soybean oil stocks. That's nearly a 9-year low on the soybean oil stocks with a record crush. So we're going like hell to try to get as much as we can, and we still can't keep the stocks. So it's been very interesting to see how that's progressed. And amidst all that, the soybean oil was actually just capitulating. We were seeing lows in the soybean oil coming into that report. And the day of the report, we finally saw a nice bounce. And I know myself, and I think most people were thinking that might be the end of that fall in the soybean oil, and turn right around the next 2 days and trade lower again. But we did show some nice market action to finish the week. The soybean oil and meal spread has been extreme. And I think we will see that turn around a little bit. Meal has been very high. Soybean oil has been very low when compared to the normal ratio to meal and to crude oil. So we should see that kind of correct itself. And soybean oil, I believe, will be the driver in addition to planting progress in Brazil likely going to slow in the coming weeks. They are actually, the midday GFS today had Brazil drier in the extended forecast than what they had previously anticipated. And the Brazilians, as we've talked about on this channel many times, they don't plant without moisture or a really good chance of moisture to be in the soil. So likely we'll see some further delays there. But in the meantime, we're just hugging this $13 level, which I'm glad we're on the top side of it and not the bottom. We finished at 13.02 and a quarter. We needed to stay above there today. We did that. So, but to get away from the $13 level, we're going to need some of these things to come around. We're going to need the bean oil to come higher. We're going to need some planting delays to further in Brazil. Some of these pieces have to come together.
Switching over to livestock, we'll start with cattle. They did not have a good week.
Disaster. And what's interesting about it is, although the cattle futures market had a horrible week, live cattle didn't get beat up too awful bad, but the fed cattle cash trade this week was actually higher. And so it's kind of odd, and you don't see that very often, to see a really hard down board. Feeders obviously led the way. If anybody was watching, November feeders were down 935 for the week, just a massive move lower. I have been talking in our CommStock report, I guess not talking, but writing in the CommStock report, that we could see November feeders target some gap levels that were quite a ways below the market. Well, today we filled the first of those two. Now we could fall another $3.50, $4, fill the next one. That might satisfy the technicians, and then we would be on our way back higher again. So that's not something that was out of the realm of possibility, and we knew that. But I am surprised to see the feeder cattle cash going backwards while the fed cattle cash is going forward. So we gained $1 to $2 across the 5-area feeding region on the fed cattle. Meanwhile, we lost that $2 in the feeder cattle cash. So you saw the index down almost every day this week, if not every day. I'd have to check the numbers, but basically you were working about 50 cents lower a day on the feeder cattle cash this week while we were gaining that much back in the fed cattle. So really interesting how that's happened. One of the big triggers yesterday when we saw feeder cattle down $5, fat cattle down $2, at 7:30 a.m. we got the weekly export sales report, and we sold 400 tons of beef on the week. Normally we would be somewhere around, say, 16,000 tons, and we sold 400. So absolutely atrocious export sales number. That has to rebound next week or we're going to have a situation. But that was 97% below the 4-week average on the export sales report for the weekly numbers. And it could rebound just as fast. I mean, we could be right back up to a normal pace next week, but that is definitely a cause for concern. Packers may be pricing that overseas beef out of the market to keep the domestic prices at a reasonable level, because that's all in their hands. We don't control that. So definitely an interesting development there that will be watched closely. But, I talked about the November feeder cattle being down 935 for the week and filling the first gap. I'd like to pull up a chart of that November feeder contract and see where we do have that first gap that filled just on today's trade. And then you can see just below that, we did have another gap that's still about $3.50 below the market here. So that would be your downside target for most technicians. If not, we're going to go test those lows that were posted just before that second gap. So definitely be on guard and see what happens here.
So do you think some of this also is because they have a report coming out at 2:00 today, correct? Cattle
yes. I'm glad you said that. Yeah.
Is some of that playing in? Are they waiting for that? Is that what this is from? I mean,
well, it's got to be factoring in.
Okay.
We're looking for slightly higher placements, massively lower marketings. So yeah, that's got to factor in. But yeah, cattle on feed comes out as we're recording here in 15 minutes. So those will be big numbers that everybody will be watching for. And that'll probably dictate how we start next week. I think most are anticipating that. But what's odd about this cattle on feed report is the placement number estimates are in a range, started out the week in a range of about 9%, which is 4 times normal. And now we're down to about 7.5% on that range of estimates. So you go from 3.5% one direction to 4% the other direction. So it's still a very wide range compared to normal. And if those numbers do happen to come in at the extreme end of either, then we're going to have surprises in the market. We're going to be trading sharply higher or lower come Monday morning. But hopefully we'll be somewhere near the middle and near the average estimate, and we won't get too excited. However, I will say with the beat down that they took this week, if we are near a neutral report come 2:00 today, you're going to see some higher trade come Monday because we have just demolished this market so badly leading in.
So did the pigs take a hit also with this, or any good news on them?
No, never. It's just a lost cause at this point. No, it's sad, honestly. Hogs, October was being propped up by the cash, and now October's off the board, and so we got to look to December. That's now our spot month, and I fully anticipated, October expires, December's running a $12 deficit at the time. We're going to see December try to make a move, close some of that gap, maybe trade $5-6 higher. No, we traded $3.50 lower for the week, finished the December contract at $66, and they're out there selling $70 pigs. It's just, it's tough. We did take out support, but nowhere near like the cattle market had to take this week. So we'll see how that develops. Cash trade continues up and down on a day-to-day basis, but we're in a longer-term lower trend. Glut of supply expected fourth quarter. And so what that's creating is kind of interesting. I guess the anticipation is as we move towards the end of the year, we're going to have too much supply. So that's why we already have these prices that are lower than what we're seeing for cash right now. And, we'll take a look here at the December hog chart, and you can see, we've just taken out any kind of support that's been in place for several weeks now, making these lows right now. It would be nice to see this thing turn around, and hopefully we will see that based on the fact that the cash has been trending lower and at some point is going to turn around. So one of the things that's been catching my eye as I look at the overall hog market is the calendar spreads have been kind of getting a little cattywampus. We're expecting this glut of supply to end the year, but we're expecting to recover before Q2 next year or during Q2 next year. So in that April to June timeframe, we should be worked through the glut of supply and back to a reasonable number. Then we should have higher prices. We don't have all the pigs to kill. So when I look at the June contract running $1.50 deficit to the August contract, that kind of perks my interest. So I've been getting a lot of spread traders going after that. And if nothing else, August and June should be running similar to each other, not $1.50 spread. Normally June would hold about a $2 premium. So that's something to keep an eye on as we go forward too. Right now it doesn't look good because the front months are lower, but we could see that change very quickly as people start to take note of that.
Overall, how do you think the week went?
I guess I was shocked by the weakness in the cattle. I wasn't surprised by the hogs. It's fourth quarter, right? It's the first month of fourth quarter. We knew fourth quarter was going to be bad, so I wasn't shocked by that. Cattle surprised me. I fully expected that we would go attack these gap levels in the feeder cattle. I thought this weakness would come. I've talked about it numerous times. I've been trying to get guys to put protection on. And so the fact that we saw weakness and these prices doesn't surprise me, but doing it in a week shocked me. I did not think we'd strip $10 out of feeder cattle in 1 week. So on that side of it, doesn't feel good. However, I will say in general, I feel better about the commodities as a whole than I have in quite a while. And I think maybe part of that is we're seeing this flight to quality. And because of the war situations that are going on, global economic unrest, all these things factor in. And I just think really we're going to see commodities be a winner here, tangible goods, as opposed to equity markets and electric cars.
All right, that'll do for this episode. Have a good weekend.
You too, Breann. Thanks.
Want more premium content? Subscribe to the CommStock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.